Hey there, welcome to the channel. Have you ever wondered how the stock market works? Why do prices go up and down? And what it all means for you? Well, you're in the right place. In this video, we're going to break it all down in a simple way. So, if you're new to investing or just curious about the stock market, stick around. Let's get into it. So, first things first. What exactly is the stock market? Well, at its core, stock market is a place where people buy and sell ownership in companies. The stock part comes from buying shares of a company, and each share is like owning a tiny piece of that company. When you buy a share of a company, you become a shareholder, which means you own a small part of that company. And as the company grows and makes money, you could benefit. But if the company performs poorly, your investment might lose value. That's the risk and reward of investing in the stock market. But how do these stocks actually get bought and sold? Well, the stock market is made up of various exchanges, the most famous being the New York Stock Exchange and the NASDAQ. Think of these exchanges like huge marketplaces where buyers and sellers come together. There are hundreds of stocks being traded every single day, from tech giants like Apple and Microsoft to emerging companies in industries like clean energy or healthcare. Now, these stocks don't just get bought and sold directly between two people in a room. Most of these trades happen electronically. People place orders through brokers, just like Robinhood or Charles Schwab. And these brokers send orders to the exchange where trades are made. So, let's say you're investing in buying shares of, say, Apple. You open your trading it, decide how many shares you want to buy, and place an order. If there's someone on the other side willing to sell some shares of Apple, your order goes through and you've just bought a stock. Here's the thing. The price of stock is not fixed. It goes up and down all the time based on a number of factors. Here's where it gets interesting. I'm going to tell you a couple of the reasons why stock market price change. Number one, company performance. If a company is doing well, it's increasing profits, launching new products, or gaining market share, stock price tends to go up. But if the company struggles, say they miss their earnings targets or face some scandals, the price tends to fall. Number two, market sentiment. If a company is doing great, stock prices can be affected by the mood of the market. If investors are feeling great and very optimistic about the economy, stock tends to rise. But if they're worried about a recession, prices can drop. Number three, supply and demand. Just like any market, stock price is governed by supply and demand. If more people want to buy stock, price goes up. If more people are selling than buying, price goes down. So, stock prices are constantly changing based on all sorts of factors. And these fluctuations can happen in a matter of seconds. Now you might be saying, so now I know how the stock market works, but how do I make money? Well, there are two main ways to make profits from stocks: capital gains and dividends. So, capital gains. What are capital gains, you may ask? They are when you buy a stock at a lower price and sell it at a higher price. Say you buy the share for $40, you sell it $50, you just made $10 profit. Number two, dividends. Some companies, such as Coca-Cola, pay dividends to their shareholders. These are kind of like a portion of profits they pay. If you own a share and a company pays a dividend, you earn money just by holding on to the stock. Well, of course, there's risk. There's a risk losing money if stock price goes down. That's why investing in stocks requires a long-term perspective and understanding the risks involved. Over time, the stock market has historically gone up, but there will always be ups and downs along the way. The key is to stay informed, make smart decisions, and avoid panic selling when things get tough. So you have it there, the basics of how the stock market works. You buy shares, you become an owner in a company, and you can make money through price changes or dividends. But always remember, with potential reward comes a risk. So it's important to do your own research and understand what you're investing in. If If you found this video helpful, be sure to hit that like button, subscribe to the channel, and drop any questions you have about the stock market in the comments below. I'll be happy to answer them. Thanks for watching. See you in the next video.